The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the June 2nd, the magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, set it off early, and send it to Steve at TFNN.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day here with a mixed bag. Dow's off 153, S&P's down 8, NASDAQ 100 up 10, Russell's off 5, Tranny's down 160, Semis up 32, NASDAQ Composite up 9 points, New York Stock Exchange up 9 points as well. The XAU is up nicely, a 6% move there, but it's going to go ahead and complete a TD9 count top today. That's the chart that is on our screen. If you look at the upper left-hand chart, you'll see that we formed bar number 9 on Friday, and the top of a TD9 count pattern will take place on bars 8, 9 to the bar following 9. Now, whatever today's high is in the XAU, you're going to want to watch that. Why? Because if we close above today's high, and I don't know what it is right now, I can share with you, today's high is 204.54, but it's likely going to head higher. Don't know whether it will or won't, but I don't see a bottom or topping signal yet on the 30-minute time frame chart to suggest otherwise. So if we do close above whatever today's high is tomorrow, that tells us about a very strong upward momentum move. We've got bullish signals on the weekly time frame chart. We have bullish signals on the monthly time frame chart for the XAU. The GDX is really the same. If we take a look at it, and again, we're just looking for signals, TD9 count signals that are part of the market analyzer set of instruments that we take a look at to try to understand what the market is communicating to us. Here, if we take a look at the GDX, you'll see that's the same setup. Now, there's also a Rhodes Momentum Indicator signal that's been triggered. That needs a bearish reversal candle to confirm a top. But still, with regard to tomorrow, watch today's high, whatever that is. If we close above that, tells you about a strong upward momentum move that's in place out here. On a weekly time frame, a close above, let me just open up the weekly chart just to make sure. Looks like it was a completion of an A to B equals CD pattern, although I don't know that I can say that. Nope, I think that, let me just put in the A to B point out here. It looks like, that wasn't it. Let's try it again. Just want to put in, well, really we should put in this A to B equals CD pattern here. That's our A to B point. I'm just going to move this line over to the C point. Now, the C point of an A to B equals CD pattern is the next lowest low that forms after the B point. Well, we did achieve a sell the D point top, and that did take place out here on April 25th, but it closed above that bullish or bearish engulfing candle, 53.25. We're at 53.54, negates that signal. And that this is the weekly time frame that we're looking at. Now, that's not till Friday, so right, it's not today, but there's a sell the D point top in the GDX, and to close above that on Friday would be another bullish out outcome for it. There are some individual stocks as well that we can take a look at. For example, Agnico Eagle confirmed a TD9 count top on Friday. It will complete that pattern today. Looks very much like the GDX chart as soon as it populates here. But you should see that we are in the bar following bar number 9 today. No Rhodes Momentum Indicator signal that's been triggered. The weekly time frame chart has a Rhodes Momentum Indicator top. That's AEM, and that requires a close above 126.76 on Friday to negate that signal out there. Franco-Nevada is completing a TD9 count, completed a TD9 count pattern on Monday. That's on Friday. So this was good. Okay, so Franco-Nevada, which gives pretty good signals with regard to what the GDX's intent is negating its daily TD9 count top. So we take a look at it. Price is trading into its swing point high, I believe. That's from April 21st. Volume there about 1.4 million shares. We've been trading for just short of 2 hours, 297,000 shares. So price is moving into that with lighter volume. Now, even though we would negate a TD9 count daily top today, very likely to do that, on a weekly basis, you've got a TD9 count top as well. And that's going to require a close above the high from April 25th, same high, 178.74 out there. On a monthly time frame, there is an A to B equals CD pattern to the upside. We have attained more than the 1-to-1 level. A bearish reversal candle on that time frame would confirm a top. But FNV is suggesting here, and we'd have to go do a correlation chart, the FNV versus the GDX. I think we'll find that they are very directionally correlated. That being the case, that could be giving us an early signal that gold is in full-out breakout rally mode along with the mining equities out there. Same thing is true with regard to gold fields and Kinross Gold. So GFI, I'm going to put that up on our screen for us. We should see that it's TD9 count pattern that completed on Friday. Prices traded above that. We see that here. The weekly time frame has basically a sell the D point top, most likely, and that says that it closed on a weekly basis above 25.11 would negate that signal out there. The 30-minute time frame chart for GFI, if it closes above, this is a 30-minute time frame chart, 25.12. A close above 25.12 on a 30-minute bar is going to suggest that the rally should continue. Lastly, let's take a look at Kinross Gold. KGC is a ticker symbol. Again, it too is negating its TD9 count top. Although, actually, I take that back. It never did. Hold on a minute here. Let me make sure I give you correct information. 1491. 1491 was this high here? 1491, same high. Supposed to be greater than. So we're going to pass on Kinross Gold, with the exception of saying that on a weekly basis, you've got a TD9 count, Rhodes Momentum Indicator top. At the end of the week, you need to see a close above 1596 to suggest that it wants to head higher out there. So that was not really the plan, but we did tend to go over mostly the gold mining stocks out there. We might as well take a look at Goldilocks, see what it is doing. Again, we're dealing with the August contract, price up 2.5% out there. Now, I don't recall gold having any kind of TD9 count top, much like we saw with regard to the XAU and the GDX. Instead, what we have going on here with regard to gold, we'll open up this chart as soon as it forms. We're likely to see a to B equals CD pattern, at least a short-term version, form today out here. That's going to require a close above the high from May 23rd. And that high is 33.95.30. We're at 33.99.40. If, in fact, we get a close above that, that's going to go ahead and confirm an A to B equals CD pattern on the upside. That's going to take us back. Just give me a moment here. We'll move this over, and you'll see this is going to take us back to our all-time highs out there. That's got that Rhodes Momentum Indicator top. So in order for gold to negate that signal for the daily time frame, we'll need to see it close above 35.39.30. But today, just simply watch the level of 33.95.30. You close above that, you've got an A to B equals CD pattern to the upside for Goldilocks. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. A quick peek at the equity futures here. If we take a look at the daily time frame, the one changed from Friday when we were last together is a brand new profile that has formed inside the ES Mini. Now, that profile, the bottom of which is just slightly below the prior profile at 58.32, the top is also slightly above the prior top, and the current profile resistance level is now at 59.83. Mark those numbers on your pad of paper out there. What does that mean when a new profile wraps around a prior profile? Well, it means that we should expect and anticipate a consolidating market out there. We've been consolidating basically in this area for 2, 4, 6, 8, 9, 10, 11, 12, 13, 14 days, 2 solid weeks, really almost 3 solid weeks of trading out. In fact, it was probably 3 solid weeks of trading out there. If we take a look at the NQ, it has not generated a new profile. It's just consolidated with inside profile, as is the Dow Equity Future contract. Neither the ES Daily or the NQ Daily have topping patterns. They need bearish reversal candles to confirm those, whereas the Dow Equity Future contract does have a TD9 count top. That has simply led to a consolidation with inside profile. It's supported 41,935, resistance 42,716. In the case of the Russell 2000, it is trading below both its oscillator and chain zone, which is green, so it's lost its momentum, and it's trading below the bottom of its daily profile. This could be day number 2 below that. If, in fact, that unfolds, it increases the odds of a move back towards breakout support. That would be at 1977 to 40. So that's what's going on. We take the daily equity future contracts. So if we just slide in just for a few moments here and take a look at what's going on intraday, let me update a couple of these charts out here, get some current signals, make sure we're all set. Daily time frame we don't need to really review. The 5-hour time frame for the ES Mini is one worth noting. And the reason that it's worth noting is because the oscillator and change on has acted as resistance. So we are up testing it right now. The 5-hour time frame oscillator and change line is printed out at about 59.15. Let's call it 59.17. If price closed above 59.17, odds favor that price going to make a run for its sell zone. So the next resistance level, and yes, there would be another resistance level above the green oscillator and change line, would be the sell zone of its profile, 59.33 to 59.41. Or time frame chart, suggesting it wants to make a move up towards the 59.25 level. The 2-hour time frame chart has resistance at 59.25. 60-minute time frame chart has got a nice TD9 count bottom. Resistance here, 59.18. So not seeing any really tops or anything of significance on the lower row of charts out there. So it's just about the 5-hour dealing with that oscillator and change line resistance level. Let's take a quick peek in at the NQ. Hopefully these charts will populate pretty quickly out here. Hopefully. They do. The NQ, of course, on the daily time frame, that populates. You can see price is consolidated with inside its daily profile. The 5-hour time frame chart, as we can see, is not giving us a signal yet. It's giving us the ES Mini data. But as soon as we get to the 20,000 area, now we do. Okay, so we can see that the 5-hour chart also dealing with oscillator and change line resistance out here. Now, price is sitting at it right now, 21,394. We're 21,386. So 21,395. A price close above that, we likely see 21,482 to 21,590. 2-hour chart is suggesting a further move higher. The 4-hour time frame chart would suggest the same as long as price can close above 21,375. No top on the 60, no top on the 30, no top on the 15, or the 10-minute time frame charts out there. So no topping signals here. It's really going to be all about whether or not on a sustained level, the NQ can close above the top of its the oscillator and change line. Currently printing again, we'll use 21,395. Let's use 21,395 as the number there. So that's what's going on in essence with regard to the equity future contracts. You could be looking at really a sideways consolidation. If I were to look at the 97-year cycle, I believe it's 97 years. 97-year cycle for the ES Mini. We are in that favorable time period. That favorable time period begins, the sell in May favorable time period begins basically at the end of May. As you can see here in the bottom right, you'll see that June and July, typically over a 97-year period of time, have had a profitable session out there. If we take a look at changing this from just your typical 97 years on average, what it does, look at the post-election cycle out there. The post-election cycle, which is what I believe we are in, really supports somewhat of a sideway-ish type move out there. That sideway-ish move could last through the middle of June, could last all the way to the end of June out there. And you can see here, if you look at the bottom, you've got April's usually a good month, May's a good month, July's a good month, and June is the one that kind of throttles back. This is the post-election seasonal cycle chart that we're looking at for the S&P 500. We can switch this up. Let's do that. Let's go take a look at the Dow. The Dow's got 100 and some odd years worth of data, 128 years worth of data. So it's got more data. Its patterns may change out here. This is the seasonal cycle over 128-year period of time. But here you can see June and July, even August, are typically profitable trading months using this, using just simply the average over 128-year period of time. We can take the post-election cycle. That gives us 32 touch points here. We can see basically a sideways move, sideways to lower, with the bottom forming in the third week of June, rallying up into the August timeframe, and then we start to move lower. So that is the post-election seasonal cycle for both the Dow and for the S&P 500. Now let's go, well, let's do one more thing out here, one more maintenance thing, if you will. Let's go take a look at what's going on with regard to the spot VIX and the advanced decline oscillator for the New York Stock Exchange. The first one up is the New York Stock Exchange Advanced Decline Oscillator, currently printed at minus 75 and change out there. That tells us we are neither oversold, and it tells us that the sellers are the ones that have control of the market. Now, that is the opposite of what we have for the spot VIX index, which tells us that buyers are the one with the edge because price is below its 50-day exponents moving average, the 50-day printed at 22.55 out there. So we've got opposite signals out there. That adds to the idea of a consolidation market. If these two start to agree, well, then that's a whole different message, but that's not the message that we have right now. I believe I have now taken a look at everything that we probably should, just to give you a feel, generally speaking, for the markets overall. Why don't we start taking a look at some of the requests that have come in? The first one coming in from Sat P inside the Tiger's Den wants to take a look at Upstart, UPST. Well, UPST, I'm not sure that's Upstart, but UPST, which is consolidating with inside its daily profile. That's after forming a sell the D point top. So the Three River Evening Star pattern that formed between the days of May 12th, May 13th, and May 15th that created that sell the D point top. Price then traded and actually closed below the bottom of its daily profile, but never for 2 consecutive sessions. So we just sat and have a consolidation basically between about 45.55 and 52.93. The weekly time frame chart, also a consolidating pattern between 35.54, 56.21. Prices below the oscillator and change line, so in essence, it's lost its momentum, but that momentum continues to find support at about the 45.55 level. And then on the monthly time frame, we can see that price is traded above its oscillator and change line, but with inside profile levels. So you got a consolidation, daily, weekly, and monthly. Numbers are different. Monthly is 27.44 to 61.61. If I'm not mistaken, I think you were looking maybe to add a few shares here. I wish I could provide you with like a really great bottom signal and pattern out here, Sat, but I don't have that. And the question is a daily just preparing to form an A to B equals CD pattern to the downside? I don't know the answer to that question, but I suspect right now is a time not necessarily to enter or add additional shares inside of UPST. We'd like to have a clearer message. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're taking a look at ticker symbol RIG. This is also for SAT-P, and I believe, again, SAT was looking to add to a position here. Here's what I can share with you with regard to RIG, Transocean. Transocean has got a nice daily Rhodes momentum indicator bottom. It's got a nice weekly by the D-point bottom pattern. That formed with this bearish engulfing candle. You can see the A to B equals CD pattern more easily on the monthly time frame chart, which completed a TD9 count bottom. So RIG has got bottoms for daily, weekly, and monthly. What does that mean? Well, the first thing is it means if we see a close below the low from April, that low being $1.97, well, then RIG has got lower to go out there. That's what that would mean. If we take a look at the seasonal pattern for Transocean, let's pull this up here. We have a total of 31 years worth of data, and that's what's up on your screen. You can see that RIG has just entered what I would say is its most unfavorable seasonal cycle time frame over a 31-year period of time. That's between June and October. At least that's what it typically does. However, we're certainly not getting a topping signal. At least, well, are we getting a topping signal? Well, certainly on a daily time frame, the answer to that is no. In fact, the daily could be suggesting to you and I that the low that formed out here on May 23rd as price got back to profile support could be the C point of an A to B equals CD pattern on the upside. We just don't know, but a key area of support held. Now, at the same time, on May 23rd, that was holding, we had the weekly chart holding oscillator and change line support. Now, the issue that RIG has needs to overcome. So do we have a top? Well, in the case of the weekly time frame chart, what we have is so far just a counter trend move. And that counter trend move found resistance at the bottom of his profile. That's at $2.68. So that's a level where 262 to 6 pennies really make a big difference, Stevie? Well, from a technical pattern recognition standpoint, the answer is absolutely it does. Now, the 268 level, that's not a daily resistance. That is a weekly resistance level. So that comes Friday. But if price can begin trading above that, that would be a positive outcome. And it would say that longer term, what RIG should do is make its way up towards 348. The monthly oscillator and change line. Of course, that number is going to change as price moves up and down, but just gives you a kind of a price target area. So we can't get to 348 until we get above 268. All I can share with you is that seasonal cycle, that certainly is not lining up with what we're seeing right here. We've got a nice daily, weekly, and monthly bottom pattern out there. So I do hope that helps you out, Sat. And as always, thanks much for taking the time to write in. Duncan Steve wants to take a look at one of the favorite stocks of his and many out there, and that is actually the ETF, the SOXX. And SOXX on a daily basis is nothing more than a consolidation after having formed a TD9 count bottom. So a TD9 count is held up pretty well. On Friday, we had price test the swing point for May 23rd. 9.5 million shares were traded that day. We tested with 10.7. We tested and rejected. What does that mean? That means that we should see at least another test of the high, that being 203.66. The low so far today, 204.29. So that has not been tested. We're trading with inside the profile. I would say, Dunk, that odds favor price are going to get and at least test the top of that swing point, or maybe the bottom of the profile, 200.49. Weekly time frame chart is just simply a consolidation with inside profiles. Resistance, strong resistance being 209.93. Monthly chart's got a beautiful TD9 count bottom. Ought to make its way up towards 221.12. It's got to deal with the daily TD9 count top and its consolidation. So that's what's going on there. Dunk, you also want to look at CRNC out here. So let's pull up its charts, see what they're communicating to you and I. CRNC trade out at $8.30. It is trading below profile support. It has a daily sell the D point top. That formed out here with this bearish engulfing candle on May 14th. It formed it with another bearish engulfing candle on May the 8th out there. Now we have price below a red oscillator and change line and profile support. Dunk, this increased the odds of price moving lower. Now, the swing point that it's dealing with on a daily basis is the one from May 21st. Volume there, 966,000 shares. In 2 hours of trading, 247. So you're moving into it with similar type volume, maybe not all the way up, 966, but pretty darn close out there. And a price closing below that swing point. That swing point is 872. You will trigger an A to B equals CD pattern to the downside. The weekly time frame chart has support at 685. Now, chances are that A to B equals C. Let's just draw it in here approximately. So there's your A to B point. Let's move that over to what is at the moment in time the C point of this potential pattern out there. It has not formed an A to B equals CD just yet. It's got to take out that B point labeled C on my screen. That would take us down towards 650. And the bottom of the weekly profile is 685. So what you're watching for here again, Dunk, is that low from May 21st out there. On a monthly time frame, it's really not the monthly, in my opinion, that is controlling things. It is the weekly and the daily. And on the weekly chart, which had a beautiful TD9 count bottom, prices found support at that oscillator and change line. So what you know, and I know, and the Den knows, is that if you see CRNC close above that oscillator and change line at about 913 right now, probably use 915, 920. That would be a bullish outcome. And you've got one more area to take out. That would be the top of the weekly profile at 1050. If you do that, you're on your way to the 15 buckaroonie level out there. But you could be seeing an A to B equals CD pattern to the downside, so you're going to watch that 685-ish level on a move lower. So, Dunk, hope that helps you out. As always, thanks so much for your request. Peak G writes in, wants to take a look at HIMX. So let's pull its charts up on our screen out here. HIMX trading out at $8.19. It is a... I see a sell the D point top. That was confirmed 4 days ago with that bearish dark cloud cover candle. And now we have here peak is price trading with inside its profile. Profile support, 785. A likely target as long as price remains below 825. The resistance level, 852, the top of its profile. On a weekly time frame, let me open up this chart, see if there was any kind of bottom pattern. Nope, not that I see. That doesn't mean that it hasn't bottomed. There was no bottom pattern. Price right now is consolidating with inside its weekly profile, 770 to 975. Your key area of resistance right now is its oscillator and change line. That's at 825. Let's call it about 830. If you're close above 830, you're likely off to 950, 924 out there. The monthly time frame, you're consolidating with inside its profile as well, but price remains above its green oscillator and change line. We closed above last month's high. I'm talking about May closed above April's high out there, so that's a bullish signal. It was only 1 month to the upside, so likely you're going to get a second month to the upside out here. That's what I've got for you, Steve-O. Or that was Peak G. My apologies. So, Peak, I hope that gave you the information that you were looking for there. We come back from this break. We're going to go take your ticker symbol SMR for Lee. Lee's looking for an entry point into it. Steve Rhodes with TFNN. We'll be back. And, of course, if you'd like me to look at something, anything inside the Tiger's Den, or send me an email, steve@tfnn.com. Be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a ticker symbol here, L at SMR. This is for LB, who's looking for an entry point into this. So let's begin by taking a look at the monthly time frame chart, right? The month ends on Friday. It has a TD9 count top that formed way back in November of 2024. The high of that pattern was 32.30. We closed last month at 31.99. The TD9 count top is still in effect. That TD9 count top had volume. It was a swing point of 237 million shares. It was tested last month with 303 million shares. When you test the swing point and reject it with more volume, that suggests that you're going to test it again. Well, we're testing it already today out here. That high is being tested. The question is, will price take it out? Right now, unless price, as long as price remains below 32.30 out there, then the TD9 count top remains in effect. Now, we won't know until the end of next month, but it is a real good data point out there, LB, for you to be paying attention to. If we look at the weekly chart, not that I've got a top out here, but we do have a swing point. That's also November. It's November 29th. Volume there, 42 million shares, 42.4. What did we do last week? 96 million shares. So we traded into a swing point with volume. Says we should test that high. Well, we're testing that high out there. The question is, do we close above? Well, this is weekly, so this is easier. If price is able to close above 25.93 at the end of this week out there, then the entry point would basically be today. I don't know whether it will take that out or not. It certainly has the volume, to be able to take that out. The reason why I say it would be today, LB, is because if we take a look at the daily time frame chart, which does have a sell the deep point top, that was confirmed 3 days ago with the bearish engulfing candle. What should unfold is price should be able to pull back to test its oscillator and change line. Maybe it still does that. That's currently printed at 30.21. The hesitation on doing that is that this is in a bull market out here. And in a bull market, you typically don't get more than a 4 consecutive day move lower. Not that you can't, because you most certainly can, but that's why I suggested. So I would have said the entry point out here, could easily be 30.21. The caution sign, the absolute caution sign, is you got 2 swing points, a weekly and a monthly, and the monthly's got that TD9 count top that was tested and rejected with volume out there. So is that sending you and I some type of message about SMR out there? Don't know. We are also, by the way, trading with inside its bearish structure daily profile. That's between 23.93 at support and a sell zone between 33.98 and 36.85 out there. I've given you information. You've been the one that's been tracking this, so use that information and to make that decision out there. It wouldn't be unusual to see a couple-day rally and pull back to test that oscillator and change line. Just don't know out here. But I did share with you everything that I possibly could. So the only other thing I could perhaps do, let's see if this thing has any kind of date. I doubt that it does. Yeah, only been trading since, 2021. Let's just see if there's any seasonal. Oops, that's for the next one we're going to take a look at. But SMR, see if there's anything out here. There is. Stanmore Resources. Is that it? So Stanmore Resources, it's got 15. No, this is not it. Can't be it. So... Well, I don't think it can be it because that 15 years, yeah. So I don't know what what SMR here shows up as, but and I don't have a name on this one here. I don't know that it's Stanmore Resources, but when I take a look at all the data, it takes back to 2020. I know that's not 50. I'm pretty decent at math, so we won't go there. So I hope that helps you out. Oh, by the way, the other screen that I had up is for this next thing that we're going to take a look at. So that's going to be from S&P inside the Tigers and wants to take a UVIX. So let's pull this over here for those folks. That is a 2X for the volatility index. That's under the assumption that the volatility index is going to rise out here. If we take a look at the UVIX, this shows us what the holdings are within sight. And you should know that about every single ETF that you trade out there. And here we can see the two holdings that make up this contract at this moment in time. Do not look at the spot VIX index chart. You must look at the June and July 2025 contracts. It is July that has 13,000, almost 14,000 contracts. June that has 25,000 contracts. That is where your decisions need to be faced off of. Now, just out of curiosity, I don't know the answer to this, but does UVIX come up on this screen here, the seasonal screen? And the answer at this moment in time is no, it does not. Okay. But we do know the two contracts at UVIX, what the holdings are. Here, I'm taking a UVIX, and this shows you've got support between you've got support at 28.11, resist at 31.86 out there. That's the top of its profile. Do I have any kind of really great signals out here? I don't. And what we're really going to rely upon, LB, is we're going to rely upon what does the June and July future contract signal to you and I. So if we take a look at June, and June was a larger holding, you've got a TD9 count bottom that formed all the way back here in the May 13th out there. Since then, we've had a rally, price pulling back, testing that TD9 count, testing, rejecting that, the top of that TD9 count bottom pattern out here, price traded with inside profile. I would say if price can close above 2027, you're likely to see a further rally. Weekly time frame chart, I don't know that that's really worth paying attention to. So instead, let's go take a look at July for you. So here, you don't have exactly a breakout message, but if you did close above 2027, that would be a positive for taking a long position UVXY. Now let's take a look at the July futures contract for the spot VIX. Here what we have is a TD9 count bottom. That forms all the way back here in, so I get my cursor out here, back in March 25th out there. Do we have any other kind of signals? The only signals we have right now is a profile change in trend, and the price is able to close about 20.95 today. You have 2 days above, actually 4 days above profile resistance, 2 days above its oscillator and change line, would just simply increase the odds of a further rally out there. So the July contract is saying I want to rally further to June. Not so fast just yet, but if price closes above that swing point, then you may be off to the races to the upside. So I hope that helps you out, S&P. Hope that also helped you out, LB, with regard to SMR. That is all the questions that Stevie has, although let me just check the phone. Let's see what if any emails have come in. Just a quick check on that. Yes. So David H. writes in, wants to take an MSTR. So let's get that up on our screen out here. David says, give me your directional perspective over the next couple weeks. No position as of yet. How much farther will Bitcoin pull back? So we can take a look at Bitcoin as well. Here we take a look at MSTR. Right now, price is trading above the top of its daily profile, just by a smidgen, 372. Hold on a minute. Oh, I take it back. It's a bullish structured profile. It's traded the bull. So the buy zone for SMR is between 365.28 and 372.06. We're trading above the 372.06 level. If price today and tomorrow can close with 372.06, what you ought to see, David, is a run up towards 395.60-ish. That's its green oscillator and change on in the daily time frame. If price can move above that, you're looking at 419.54. The word of caution out here comes from the weekly chart, which has a completed TD9 count top, price below the oscillator and change line. However, the profiles form below price. That is a bullish message out there. What you'd really like to see this do is get back above 384.86. That would then neutralize the weekly signal out there. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Dave was asking for a directional, what my thoughts were on a direction standpoint here. And the problem is, David has said we've got two opposing viewpoints out here. The daily, which doesn't have really a bottom pattern, although price got back to its breakout level at 353.12, not all the way down there, but you got that bullish structured profile out here. What I can share with you is that you close above the center of that profile, 372.06. It increased the odds of a rally towards a 395 level, but at 385-ish is where you've got resistance on the weekly time frame. So that's what I can share with you. Hope that helps you out. Best of luck with that trade. We had a request to take a look at Nike for VIC. You asked about the Bitcoin contract. Where can this head to? I'm looking at the June contract out here with price below the bottom of its daily profile. This would be the third consecutive day. 103.480 is the next price target. That is the green oscillator and change line for the weekly time frame. We take a look at the next request coming in is to take a look at Nike for VIC. NKE is the ticker symbol. Nike is trading above the top. It had a TD9 count top, took price back to support, which has held. That was the top of its profile. And oscillator and change line on a daily time frame. Nike is bullish to neutral on a weekly time frame. Price has got resistance up at 63.75. That's the top of its profile. On a monthly time frame, would be nice if this had populated for Stevie. Nike's got resistance at 67.32 out there. Vic, so be careful with that. Nicholas writes in, would like to take a tier symbol DBVT. DBVT right now is trading out at 8.11. You're getting the signal of a potential A to B equals CD pattern to the downside. Price is trading, I believe, just below its swing point from May 20th. That swing point low is 8.14. We're at 8.11. Volume on that swing point was 341,000 shares. So far, only 16,000. Nonetheless, if you close below that, a swing point, even if it's on light volume, that would mean it closed below 8.14. You likely head lower out there. So you were looking for an entry point. I think we need to re-explore this, later on in the week. So, Nicholas, hopefully I'll hear back from you on that. And lastly, I know we're going to break out here. Dan and I will put the charts out here for AIFF for you. And folks, have a magnificent Monday. I'll look forward to seeing you later on tonight, this afternoon around 3:15. Take care. Be safe out there.